The U.S. economy added 228,000 jobs last month, according to the Labor Department's latest report. The biggest job gains came in professional and business services, manufacturing, and healthcare. Meanwhile, the unemployment rate held steady at a 17-year low of 4.1%. Nick Martell is a co-founder of MarketSnacks, an online newsletter that breaks down the day's Wall Street news. Nick, welcome.
Thanks.
What do these numbers tell us? Because at first glance, they look great, but wage growth does not look so good.
Right. Wage growth did seem like it barely ticked up, and that's mainly because you see a lot of people resorting to more part-time jobs. But we shouldn't let that take away from the fact that there were kind of three key highlights in this jobs report. The first being a major rebound from the hurricanes that we saw affecting the previous month's jobs report.
That's excellent. And so where do you focus on the areas that are growing and that have the most jobs? Where are those areas?
Okay, so this was pretty interesting. If you look at it, McDonald's that was in Texas isn't going to rebuild itself after the hurricane. So you saw a surge in construction jobs. On top of that, that followed up with a big jump in restaurant jobs, bar jobs in the region. So in the Southeast, you did see the jobs rebound.
Right.
But then most strongly, manufacturing sector added like 30,000 jobs and has its unemployment rate at the lowest level in long time.
So that's all good news, but why aren't wages going up? Why aren't wages keeping pace?
Well, you have this kind of generational shift now. You have a lot of people who are exiting the workforce. They're looking for more part-time jobs. And as a result, when you don't have those full-time jobs taken, it's going to affect how wages are done. And then you also have the e-commerce effect. When people start taking part-time jobs at companies like UPS, FedEx to ship out packages, because I know I'm buying most of my Christmas stuff on e-commerce this year, just online.
It's so easy.
And it's just these temporary jobs that end up getting filled.
All right, now let's talk about Bitcoin, because whoa, what a wild ride. I mean, it was up, then it fell down, then it came up a little bit. Where is it now, and is this a bubble?
Well, first of all, if we look at the whole context here, it's been a just crazy 2017. I mean, this started at $1,000 back in January, and then it hit $5,000, $10,000 last week, $19,000 a couple of days ago, down $3,000 a day. So the whole year has been kind of nuts. But really, the story of recent volatility begins just 2 months ago, when you have one of the world's biggest exchanges saying it's finally going to let people trade Bitcoin futures, which are contracts which allow you to buy Bitcoin at a later date at a specific price.
Does that lend it some legitimacy that it hadn't had before?
Totally. It's like going up in the big leagues right now. I mean, basically, Bitcoin gets two big things out of this. One, you get the brand legitimacy. This isn't just being traded on random exchanges in different countries throughout the world. This is going to be traded on the Chicago Board Options Exchange, which is big in just a couple days. And then second, you have speculation about what hedge funds are going to do. Now these big funds can come in, big institutional investors, and start purchasing Bitcoin contracts.
And so now that these big boys are getting into the game, what's that going to do to the price?
So people are speculating right now why the price is getting driven up. That'll probably drive the price up further. But in reality, you've got like one big naysayer here, and that's the big banks in the U.S. They're kind of like the guys in Game of Thrones saying winter is coming. They're saying, all right, regulation is inevitable. We don't know what that's going to look like. Let's hold off for now. So if you want to purchase Bitcoin futures contracts, and you want to do so through maybe Citibank in a couple days when you can, they actually won't let you. Only Goldman and a few other banks, and even for them, just a few individuals where they let actually purchase the Bitcoin contracts.
So what's your advice to the armchair investor looking at all this, saying, hey, should I get into this Bitcoin game?
Well, I think the armchair investor is probably going to have to refer to their friend who probably bought Bitcoin like a few years ago and is like saying, hey, I bought this and it was a lot of fun and really watching the ride. For now, it's just kind of like a story of an awkward prom. You basically have people not knowing who to dance with. The banks don't really want to dance with Bitcoin. The hedge funds maybe want to jump in. Retail investors don't know what's going on, but they've been driving the price up the last few weeks. So it's kind of like this awkward, funny situation.
Very, very interesting indeed. Yeah. We'll be watching it closely. Let's shift gears for a moment and talk about the Republican tax plan that looks like it will pass. How do you think this is going to affect growth?
So with the Republican tax plan, I think the focus right now is going to be on whether or not this can actually really generate this excessive jobs growth that we are already seeing. I think that's the hesitation you have from economists right now who are saying, okay, we're already noticing that businesses are generating cash. They can already borrow at super low rates. How much more job growth can they really create, and are we going to get out of here? So one thing I think some enthusiasm has been sucked out has been we already have a strong economy with its mojo back. To what extent is this going to really boost job hiring?
All right. So finally, investors still expect the Fed to hike interest rates next week. Do you think that's going to happen?
Yeah, Well, all analysts are pointing to signs that this will be the third rate hike of the year. And then keep in mind, this is one of the last few months we'll have Janet Yellen still on board.
Right.
Because she'll be replaced by Powell likely if he gets with the approval in February. But the Fed has been pretty clear all year long. If they continue to see the consistent job growth, and even last month when we saw in October there was it seemed like things weren't going according to plan, we saw a rebound post hurricanes. So consistency-wise, this is in line with what the Fed would be thinking, and we'd probably get the third hike this year.
And so what impact will that have on the markets?
Well, what we've tended to see historically in the last few years is that when the Fed increases rates, that's going to cause the stock market to kind of dip a bit. You tend to see investors kind of worried that'll hamper job growth. But what we've seen the last couple times this happened is it's so expected. The markets, as we say, like priced it in.
Right.
People are already expecting it. So probably not going to see a significant change. The Fed's been pretty clear in terms of what they plan on doing and what their roadmap was for this year. So expectations are pretty aligned with the reality.
All right. A hike is in the cards, it seems.
Yeah.
All right, Nick, thank you so much for that.
Thanks so much. That was great.